The first monetary policy meeting for the second half of this year was held by Korea's central bank today. While staying put on the key rate, the BOK lowered its economic growth projection. Hyesung breaks down the digits for us.
The Bank of Korea kept its inflation rate projection at 1.6%, but cut its growth forecast for the local economy to 2.9% from April's 3%.
We expect economic growth to continue at the level of its potential growth rate, but there is growing uncertainty over global trade conflict and the pace of monetary policy normalization by major economies.
The BOK chief said Korea's exports remain robust and that growing consumption will offset slowing investment in the country. But the bank said growing trade uncertainties and the escalating trade friction between the U.S. and China poses a risk to the South Korean economy and the financial market. With inflation also below its 2% target, the BOK left its key benchmark rate unchanged at 1.5%. South Korea's consumer price index gained 1.5% in June, the same as the previous month due to a fall in agricultural goods prices. Household debt concerns and the sluggish domestic labor market also led the bank to hold its key rate. Between January and June, a monthly average of 142,000 new jobs were added, marking the slowest growth since the 2008 global financial crisis.
Externally, growing trade protectionism is a downside risk to Korea. Domestically, slowing construction and facility investment, poor job data, and low demand-side inflation led to the bank's decision to hold rates again.
July's monetary decision leaves the U.S. interest rate 0.5% higher than that of Korea. But with the Fed expected to raise rates 2 more times this year, the BOK didn't rule out the possibility of a rate hike in the second half of this year, saying it'll closely monitor global market conditions and how the U.S.-China trade war affects the Korean economy. Hyesung, Arirang News.